Hello, this is Robert with Tax Resolution Professionals, one of the attorneys here, and we're going to be going over pennies on the dollar tax relief. It can happen, and really, sometimes for even less than pennies. This is what the IRS and the tax relief companies really don't tell you, and the points they don't tell you in the consultation, and some people hire them and get an unrealistic expectation, and some people should even have a more realistic expectation of even settling for way less than they think. So here's some better than pennies on the dollar results we've had. IRS debt at $245,000 settled for $100. It was less than a tenth of 1 cent on the dollar. How does that happen? Lots of kids, lives in an expensive area, despite decent income. Actually, this person had 4 kids and was making a little over $100,000. But still, with all the kids, being in an expensive area, expensive part of California, made them get the settlement. Second, California FTB debt of $268,000. That settled for $500. How? Social Security was their main source of income. The clients were older. FTB does tend to discriminate against younger people on accepting settlements. IRS debt of $280,000 settled for $200. How? Same thing. Social Security as the main income, not really receiving anything else. That particular person had a little bit of self-employment income, maybe $4,000 to $6,000, $7,000 per year, and they still got it. So the thing in common all these cases have is at the end of the day, they almost have nothing left over after their expenses. They also have no assets with any equity or any substantial funds in their bank accounts. High income and assets worth more than the tax debt will make a pennies on the dollar tax settlement very unlikely. But if you really got nothing and you owe a lot of money, it's going to be fractions of pennies on the dollar. And this is another thing. There's a myth out there in a lot of these companies and a lot of tax attorneys. Oh, we got offered 10%. And I remember asking the managing attorney at the first place I worked, why are we offering 10%? What's the point? Or she would also say, oh, we need to offer at least 1,000 on some cases. So why do we need to offer at least 1,000? Why do we need to do 10%? Oh, well, we want to do something significant so they don't owe again. Well, that's not my job. My job is to save you the most money. So I'm going to put $100 on some of them. Some of them I'm going to put $50. We're going to go low as we can. What the IRS does not tell you, offer low, just like we were talking about. If you have no assets and income to qualify for a tax settlement, offer a low amount. Settlements are often submitted for $10,000 plus. In fact, we just got a case like this the other day. The CPA submitted for 20 grand. No reason to submit it for 20 grand. That should have been submitted for $50. There's no need to pay extra unless you have to. So let me go back to the case that we just started here the other day before this video. The CPA submitted a settlement where for $20,000, the taxpayer has a property that's paid off, okay, and this property is worth close to what the tax debt is. So we're saying that property should not be included because they use it for business, and because of that, they should still accept a settlement. Sometimes that argument works, sometimes it doesn't. We very clearly disclose that before we ever submit these kind of settlements. On this particular case, we're coming in after the CPA submitted a settlement, and we're working the appeal. Now, how was this done wrong? Well, the CPA offered $20,000. Why would you offer $20,000? IRS is either going to say, the property's worth too much, you're not getting it, or we're going to excuse it, and it'll be way low. Sometimes you can negotiate in between some other amount. That doesn't always happen. It's usually kind of black or white, yes or no. So the CPA should not have offered 20. They should have offered 100 or 50. And then when it gets to the offer and compromise person, then you can see if you can up it a little bit if they're willing to accept your argument. And most cases like this just end up getting appealed, which is where we are now. And the appeals person will accept the argument either way. And I'll give you an example of what happened. This case we're doing right now is pending appeals, but another case where we had a paid off property that couldn't be sold because it was in Mexico. The appeals person ended up taking $2,000. The tax debt was 50 some, the house was 250, and they took 2,000. We offered 100 in the beginning. If I offered 20,000, the offer person would have took 20,000. I offer 100, now they take 2,000. We go low, they go high. What consultants at tax relief companies often don't tell you? Documents are required. IRS requires documentation to get your settlement going. We have people call, they say, oh, I hired the company, I thought they're going to do it all for me. No, you still got to provide documents. Even if we're doing it, you still got to provide documents. Most of it can be grabbed online. If you're not self-employed, all it is typically going to be pay stubs. If there's any life insurance that doesn't come out of your pay stubs, health insurance doesn't come out of your pay stubs, and bank statements for the last 3 months. And usually just your last pay stub if year to date doesn't show year to date, your last 3 pay stubs. Sometimes your last 3 months. It's very simple. It's not hard stuff to get. When you're self-employed, it becomes a little bit more complex. There will be some missing tax returns. If you have missing tax returns, there may be some expense documents you need to get together. But really, all the 1099s, everything that's reported to the IRS that shows how much you were paid, most of that can just be grabbed from the IRS. and we give that to you to help you prepare it. But there are docs required. And I know in these consultations, a lot of the people, they don't know what the hell is going on. And they're just telling you, oh, we're going to settle it. No, there's a lot of documentation. It's not a whole lot, but it's there. Income, expenses, and assets. Another thing that's not often discussed in a lot of these tax relief consultations with these consultants that really don't really know a whole lot is this varies from place to place. Some try to advise the best they can as a non-licensed person who does not work in the case. So there are some companies that actually do try to advise you the best they can. They'll tell you, you got $1 million, you're not getting a settlement, but some of them will just try to get you in and out. And some just say you get a settlement regardless of the facts. Many do not know about IRS collection financial standards. So pretty much these other numbers that are used to figure out whether you're going to get a settlement or not. It's not all just based on your actual expenses. If you live in San Francisco and you live in downtown and you live in a $10,000 a month condo, that doesn't count. They're going to give you the local standard based on averages. And then if you spend more than that, it's not always going to be considered. More assets than tax debt is usually no offer in compromise. Almost all the time, there are exceptions like business being built on the land, that you own, paid off places that can't be sold, and these exceptions don't always work. Most of these cases get appealed. Another one we had, guy had a house that was worth $30,000. If he gets kicked out of the house, well, he's just going to be homeless in 2 years. That was a great argument. That worked. It's really case by case on those, but generally more assets, no offer in compromise equals no offer in compromise. Here's the most important tips. Don't wait if you're broke, and check the CSED information for old tax debts. So many people wait until they get a job or save up some money and try to resolve their tax debt. Resolve while broke equals almost always best result. And two things here. First off, some people are waiting to save them enough money to then settle with the IRS or get enough big enough job to where, oh, now I'll have some money to settle with them. That's not the way to do it. They want, when you're broke, you get way better results. Also, don't wait to hire a tax attorney or a tax relief firm to resolve it. If you're super broke, just go to our guide and just fill it out yourself. You want to do the appropriate considerations, and we'll talk a little bit more about that here. You don't always want to submit a settlement, but if you really just can't afford it, fill it out the best you can, send it in, good chance you'll get it, okay? Don't wait to hire somebody if there's just no possibility that it's going to happen soon. You don't want to wait till now, now I got a job paying $75,000. Well, guess what? Now you don't get a settlement anymore. You make too much money, okay? Check out IRS CSED dates on tax debts. CSED dates are collection statute expiration dates. Okay, and you'll find on our page, if you just search IRS CSED dates on Google, you can find our page, and it goes through, explains those. Pretty much some debts are going to expire. So older years might be closer to expiring, obviously, than newer years. Filing an offer in compromise extends the time the IRS has to collect, as does a bankruptcy. Sometimes filing offer in compromise is not the best option, and currently non-collectible status is. Okay, so say you owe for 2009. Right now, we're doing this video in 2018. Say you owe for 2008 and 2009. Okay. On 2008, you owe $150,000. On 2009, you owe $100,000. Well, that's $250,000. 2008 is going to be expiring, if you filed it on time, sometime in 2019, probably. The next one, sometime in 2020. So this is kind of an if-then. It's up to you what you want to do. But when you're getting that close to debt's expiring, sometimes the best thing to do is put it into non-collectible status, which is a payment plan for zero, and then you wait until that debt expires. And then you go, and you're done. The bad part about that is the liens don't get withdrawn. The liens get released. So getting a lien withdrawal is better for your credit report. Getting a lien release is not as good. And this is even more common when the debts are even sooner. So, for example, we have cases now where 2007 is getting really close to expiring. We have cases where someone will owe $100,000 in 2007, and they say they don't owe 2008, they don't owe 2009, and in 2010 they owe $30,000. Well, the best strategy often here, and almost all the tax relief companies do not do this, is put it in non-collectible for now, let the debt expire, and then submit a settlement for the remainder. And that gets the guaranteed money off easier, as much as you can, and then you go on to the next debt. We explain this to the clients, we let them know what's going to be their options, and a lot of people will choose that. They know they're not going to get the lien released. They're going to get the lien released, but not withdrawn, but they want to take the guaranteed money dropping off. And that is often the safe bet. I've never heard of tax relief companies doing that strategy. I'm sure that there are other tax attorneys and CPAs, I would hope, that do that, because that is often the best strategy. Just as can't afford help, go to trp.tax/tax help. We really just explain the whole thing for you right there. We put the forms there. You can do it yourself. You can even do it yourself and then pay us to review it for you if you want to, or just send it in. Other thing I should just mention, tax liens can be filed while the offer in compromise is pending. They send you a letter when you send the offer that says you can get liens. In reality, it's very rare that they do file the liens while it's pending, but it does happen. I personally have seen that it seems to happen more at the point when you file the appeal. So if the case wasn't already in, was not in the stage of right about to have a lien being filed, usually it's not going to be filed while it's pending. Then you do the appeal, and I've seen a couple liens filed at the appeal point. But I'd say after doing a lot of these cases, there's literally only a handful I can even think of that a lien was filed while it was pending. Now, don't want to do it yourself? Give us a call, 888-515-4TAX. Again, it's 888-515-4829. Or go to trp.tax. We have a live chat agent on there. One of our legal assistants is usually manning the thing on business hours. Hit them up. You can give us a call. We'll set up a consultation, see if it's something we can help you with. And if it's not, we'll at least point you in the right direction. Thanks for watching. This is Tax Resolution Professionals. Have a great week.